All right. Hello, everybody. Welcome to our fourth edition of Deep Dives. We've done ASTS, we've done Lemonade, we've done Oscar. Today, I have the honor and privilege of hosting a deep dive with two people in the crypto industries. We've got David Hoffman, who is the co-host of the Bankless podcast. A lot of you guys in the crypto world probably know what Bankless is. It is one of the premier media entities that has been covering the crypto space over the past 5 years. So very excited to have David here. And I've got Matteo, who is a personal friend of mine. He was a former Palantir engineer. He is the founder of Global Token Exchange. And his startup just raised a $15 million Series A from Paradigm. He's been in crypto for a very long time as well. So very excited to get his thoughts on the nature of Ethereum. We're here to discuss the TradFi, I don't know if the word is obsession or excitement with an asset class called Ethereum that has now taken over Wall Street. You've got people like Tom Lee getting excited about it, Kathy Wood getting excited about it. You've got Ethereum Treasuries trying to replicate the MicroStrategy Bitcoin Treasury thesis, getting excited about it. And I think a lot of people from my community that are more so on the side of TradFi versus crypto need to know, why is everyone so excited? Why have you guys been in the industry for so long saying we should be excited about this? And if this actually is the moment to get that excited. So having said that, let's get into it. David, Matteo, thanks for being here. I'll give it to Matteo first. Just a quick little background on you, Matteo, and your journey in crypto, and why are you so excited about Ethereum in a nutshell?
Yeah, totally. Great to be here. So for me, like I went to high school in a developing country. I essentially shortly after I moved there, like the local currency had a pretty strong DPEG against the euro. And so I started using Ethereum stablecoins because it was literally the only way for me to hold dollars. And so that was really like the beginning of my journey. I came straight from Ethereum. I didn't go through sort of the traditional Bitcoin path. I was an engineer. I was always building things with my friends. And yeah, the fact that, you can now sort of build on top of this permissionless composable network was what really captured me into crypto. And so, yeah, I mean, as you know, I had a kind of parallel life in traditional tech, working at a bunch of YC companies and Palantir, but I was always obsessed with crypto on my own, trading, doing some building, meeting a lot of the teams. And yeah, now I finally pulled the trigger with GT.
David, your background, and you were actually just at Robinhood's conference around crypto. Mm-hmm. So why do you think they invited you to cover their event? How deep do your roots go when it comes to crypto?
Oh gosh, well, I've been in the industry since 2017, and Bankless, especially in 2021, I think we just became the #1 crypto podcast, kind of like retail focused crypto podcast. And there's like other crypto media out there that are like pretty familiar. There's like journalism and newsletters and like the news. And Bankless isn't really news. We are our opinionated takes on the news, and that's where we really found kind of like product market fit with crypto retail consumers, and then also TradFi media consumers, really in 2020 through 2021, and then we've gone on to this day, really because I think we tell the story of crypto. And we can like integrate what crypto is in metaphors and ways that like people can really understand. So while Ryan and I are both familiar with computers, we're pretty non-technical. And so Bankless has been around since 2020. We've been talking to everyone who's ever just come into the crypto space. And then even before Bankless, Bankless actually my second podcast. I had a podcast before Bankless called POV Crypto, and it was me and my Bitcoiner friend. And him and I would just yell at each other, debate for like 150 episodes. And so that's where I learned to like speak different languages in the crypto industry. Crypto, as many people know, is very tribal. So there are different communities that have very big walls between the communities. And usually people come into crypto and they identify with one particular community. My particular community is Ethereum. That's the one that resonates with me. Not everyone chooses a tribe, but it's something that it's a weird quirk of crypto that how people tend to come in and then affiliate with a specific project that they just think is more interesting than others.
Yeah, I have a friend who texts me every single day when XRP goes up 1 cent. So I resonate with the tribal.
We call those the XRP army people. Yeah.
Yes, exactly. All right. So let's get into it. We got a lot of people that are curious about Wall Street's obsession with Ethereum. Hoffman, we will start off with you. For the average person who has no idea why the hell Tom Lee is creating this Ethereum treasury, why do you think people care about Ethereum now?
Yeah, well, of course, starting with Bitcoin, first blockchain ever to be invented. And there's the Bitcoiner narrative that there was like the immaculate conception of Bitcoin. and it's got this really pure origin story. No one knows who the founder is, and the origin story is pretty damn magical. Ethereum has a much more familiar kind of background, but it was still also in the same way that Bitcoin was first to a lot of things. Ethereum was also first to a lot of things. It was the first smart contract chain. It really created and popularized smart contracts and allowed smart contract developers to exist. And why that's important is because that's really starting to look like how finance works. Like smart contracts is kind of just like the blockchain way of saying like an Excel sheet, but with Bitcoin technology. So you take an Excel sheet and you put it onto the Bitcoin technology, and you kind of like loosely get Ethereum. And Bitcoin, when Bitcoin was made, we never really, as a society, as humanity, we didn't really know how to make blockchains. But Satoshi really figured it out and put the components together, and it's miraculous that Bitcoin to this day is still functioning. And that's kind of the magic of the story of Bitcoin. Ethereum has taken a much more research-driven approach. And so Vitalik Buterin, founder of Ethereum, very like technically minded. He's kind of like a crypto economic philosopher type, really into math. And the Ethereum ecosystem has been heavily research-driven. And so there's been a very big push to research how to sustainably build a blockchain that can like last for our generations, and so we can hand it down to our children and our children's children and all of that. And so that's kind of like the broad context of how Ethereum fits. And then it's gone through iterative cycles. Like unlike Bitcoin, Ethereum updates and it gets better. Like before we, Ethereum really pioneered proof of stake. And then it had to go from proof of work to proof of stake, all that kind of stuff. And so it had some baggage by just the fact that it was created in 2015. But there's an army of developers and ecosystem developers really pushing the Ethereum effort forward. Why now? Like, why is this relevant now? Like, why is TradFi getting involved right now? A lot of investments that the Ethereum project has made in the early days of it has really started to like pay off. Ethereum is the most decentralized ecosystem. There's a big debate between proof of work and proof of stake. Like the proof of stake arguments is that, well, proof of work tends to frequently centralize. And as the security budget for Bitcoin runs out, well, then fewer and fewer miners are really upholding the chain. Proof of stake is far more decentralized. I'm staking an Ethereum node. My friends are staking Ethereum's nodes. We're all kind of part of this collective that's upholding the Ethereum network, and we do it with like zero energy consumption, like compared to Bitcoin. And then it goes into there's other conversations around like layer twos, which gives things like Coinbase and Robinhood the ability to have their own ledger. And what are banks? What are TradFi institutions? There's simply just ledgers. And second layers on Ethereum are ledgers for these systems to kind of interoperate. And so banks, siloed servers that don't really talk to each other, blockchains, open servers that can interoperate with each other. Everyone can kind of plug in their ledger. And there's just been a lot of growth of some of the original theses that the crypto industry really cached back in the early days of crypto: tokenized assets, identity, layer 2 blockchains. All of this stuff is really starting to become real. And I think that was particularly true with the Robinhood announcement, where the idea that like non-crypto focused, I know Robinhood's crypto focused, but they really just let you trade crypto assets on the platform. It's not really crypto. It's truly TradFi. They built an Ethereum layer 2, and then they started to use it as their back end business logic. In addition to like Circle using Ethereum to settle dollars. And a lot of these narratives that were hypothesized in the early days of crypto really became true and very tangible in this last year. And that's after the year of the 4 years of Michael Saylor doing the whole MicroStrategy thing. And so now like people are realizing like a lot of the investment that Ethereum made are starting to pay off. And Wall Street is taking note that there is this asset out there that is holding up this like massive backbone of interoperable banks for the first time, interoperable financial institutions, these open networks that like I've been participating on Ethereum. I've been transacting on Ethereum since 2017. And there's this one asset that's really tying everything together. And it's also productive, which is really cool. So there's 21 million Bitcoins, but ETH, there's not that same level of like, I can't tell you the cap on the ETH supply because there isn't one, but there is a cap on ETH issuance. It's 1.5%. So no more than 1.5% of ETH will ever be issued in a year. And when anyone ever uses the network, we all have to pay a transaction fee. It's pretty small, but in aggregate, they all collectively burn a small amount of Ether. And so in addition to the 1.5% cap, there's also an additional percentage amount of Ether that's burnt every single year just for using the currency. And then there's Ether stakers, which is the whole proof of stake thing, which allows you to get yield on Ether. And then there's Ethereum's own internal DeFi ecosystem, which allows Ether to be used effectively, be productive inside of its own DeFi ecosystem. I'm listing off a bunch of these things, and all of these things are kind of coming into an inflection point in these ETH treasury companies where people are realizing that, like, oh, this is going to be the backbone of Wall Street. We see this with Circle. We see this with Coinbase. We see this with Robinhood. And because it's productive, TradFi really likes that. And so now is really the moment for a lot of these people, Tom Lee, to really kind of capture that zeitgeist and put that into an investment vehicle, which you see in all these ETH treasury companies.
So we're going to go deeper into a lot of the things you mentioned, but the kind of core takeaway for me is that Bitcoin is 21 million, and a lot of people believe the value of it's going to go up over time based on that supply-demand imbalance. But Ethereum is this like exciting ecosystem with all these different things that are being built on top of it. And that is what Wall Street is getting attracted to right now as well. Matteo, I'll push the same question to you from your perspective. Why do you think, two layers, why is Ethereum useful as an asset to you? And why do you think Wall Street cares about it right now?
Totally, yeah. I mean, I want to echo everything David said. And I think like a good mental model for just differentiating between Bitcoin and Ethereum is like thinking about like kind of the ethos of how each of those networks started, right? Bitcoin was sort of in the aftermath of the 2008 crisis. It was very much a hedge against the collapse of fiat. Ethereum then looked at that and said, okay, well, it's great to have this globally distributed network, but how do we actually build things on top of it? And so the key differentiability is in how programmable Ethereum is. If you think about, again, this sort of distributed network, what if you want to build, a money market protocol on top of it? Or what if you want to sort of build, a trading product on top of it to enable people to transact across different currencies? On Ethereum, you can also issue stablecoins and actually hold, something that mirrors a dollar. And so, it's not necessarily like on Bitcoin where, okay, you have Bitcoin and there's like all kinds of things that people have done to kind of make it as programmable as possible. But Bitcoin at its core has this transaction model, which is called the UTXO, which, like, not to get too technical, but essentially makes it way harder to be as expressive as Ethereum and all the kinds of things you can build on there. So yeah, I think like a good mental model between the two is like one was made as a hedge against fiat. The other one is really this decentralized network, which is composable and programmable. And in terms of why now, I totally agree that like a lot of the investments that Ethereum has made over the long term are starting to pay off. I also think there's like a few headwinds that are, super helpful. Like, obviously the change in admin has been really positive for crypto as a whole and actually enables Wall Street to do things like this. I don't know if Robinhood and all of these TradFi players would be able to start playing into crypto as much as they have been, under the previous administration as they have now. And so I think that the fact that users are actually going on chain and using these products at an increasing rate, and the technology is getting better on the blockchain side to actually enable this kind of scale, I think all of those sort of are creating a perfect storm for Wall Street to get interested in Ethereum.
So I think this makes a lot of sense. Bitcoin was created as a hedge against the broken money system that Satoshi saw. And the thesis on Bitcoin has kind of played out and hopefully continues to play out. Ethereum, you guys are saying, is actually, and this is similar to what Vlad was saying at the conference, it is something that creates utility around the concept of cryptocurrencies versus just the speculation around an asset that happens to be a cryptocurrency. So speaking of utility, let's transition the conversation to stablecoins. In my podcast with Tom Lee, his number one argument for being bullish Ethereum and creating this entire ETH treasury was that the stablecoin TAM right now is 250 billion. And in the next 10 years, he thinks that goes to 2 trillion. So he thinks that 10x's, and particularly he thinks that 10x's because the utility of a stablecoin like instant settlement is something that's going to be adopted across the entire world. So David, let's bring it back to you. What are stablecoins and why was the Circle IPO, in your opinion, so rooted in the concept of Ethereum?
Yeah, stablecoins they're pretty simple to understand when you also understand that when you deposit, $10 into Wells Fargo and then a 10 shows up on your Wells Fargo front end, that's a Wells Fargo dollar. And Circle just does the same thing. You deposit $10 into Circle and they give you 10 tokens on Ethereum. But they give you, when they're tokens on Ethereum, they give you, as the owner of said tokens, a lot more freedom with what you can do with those things. My Wells Fargo dollars are pretty inert. Can't really do much. I can send them around and I can receive more, but that's about it. With stablecoins on Ethereum, I can go leverage them inside of a DeFi app. I can deposit them into a DeFi app, earn some yield. I can speculate on them on a perps protocol. I can just do more. There's just more utility. Tokens on smart contract platforms have access to the apps that developers build, and any token on Ethereum can have access to apps that developers build. And so because they're just simply the same thing as they came before it, like dollars, but they just get all of the tailwinds of the utility of the Ethereum developer ecosystem, which is pretty large. And then there's at Bankless Ventures, we look at a ton of kind of localized payments startups in different developing countries. And so there's all these developing countries that are working to kind of connect the stablecoin ecosystem on Ethereum to like the last mile problem of getting payments into developing countries in Latin America. And Latin America is one of the biggest adopters of stablecoins, Argentina specifically, but really like Africa is also a huge adopter of stablecoins. And it's really about like kind of like what I said before. The traditional finance system is this very broken mesh network of financial silos. The Wells Fargo server talks to the Visa server, which talks to the Goldman Sachs server. And one of those servers has a connection with another bank in a different country, but they don't really trust that. When it's all on Ethereum, everyone trusts Ethereum. And that's kind of this uniform single source of truth that the world can all kind of point to and look at. And when dollars are there on Ethereum, it's just truly the most useful form of a place to have a dollar. And so they're just easier to transact globally. I can send them around to anyone, doesn't matter who. The fact that there's like no KYC required, as in I can just become a user of Ethereum, I can get an Ethereum wallet and receive dollars, is incredibly like liberating for so much of the unbanked population. We call our podcast Bankless because stable coins or tokens generally don't require a form of identification, which could be pretty prohibitive. From a lot of developing countries.
To push back real quick, what about all the people that say, well, if you can't identify someone inside of an actual bank, then fraud and all this other stuff opens up that is not good for society?
I mean, you can go and you can look at where fraud actually does happen. And let me tell you, it actually happens in banks. Blockchains are a pretty terrible place to do fraud because everyone can look at the dollars running around the internet on Ethereum because these are fully transparent, auditable ledgers. You know, people call Bitcoin like pseudo-anonymous, or they mistakenly think it's anonymous. It's actually the most transparent financial system ever created because, like I said, it's this open source of truth. It's the source of truth. Can you go, Amit? Can you go like audit Wells Fargo? Because you can audit stablecoins. You can audit Circle stablecoins on Ethereum right now because there's a place, a website that you can go to and you can look at where literally every single USDC is on Ethereum. And so it's very transparent, it's very auditable. And that's where it gets a lot of the trust. And so it's truly just like a software upgrade to the way we do finance, starting with stablecoins because they're kind of the easy thing. They're not securities. It's pretty permissionless to do. That's why Circle just started making stablecoins. Tether just started making stablecoins. Further assets beyond stablecoins, like tokenized T-bills, which are kind of like the next most popular thing, require a lot more compliance. But nonetheless, like the utility you get, they're just more useful to everyone involved when they're on Ethereum.
Matteo, same question to you. Do you think stablecoins is one of the reasons why Wall Street's waking up to Ethereum?
Yeah, definitely. I mean, I think like a very simple experiment for everybody to try is like call up a friend abroad, try to send them $10, write down how long it takes and how much it costs, and then try to do the same thing with stablecoins, and you'll see instantly why sort of stablecoins are valuable. I don't think it's a coincidence that, you know, like SpaceX, companies that like have to basically source the supply chain from across the entire world and sort of have all of these siloed financial systems talk to one another are first adopters of stablecoins. It's just a significantly faster and cheaper way to kind of send money around the world. And, you know, I think that use case, as opposed to perhaps like some of the more on the edge kind of crypto native things like DAOs or even NFTs, are more obvious to TradFi. And also as something that has instant kind of PMF. You can look at sort of like the supply of like minted Tether or minted USDC. You know, it's literally up only, up and to the right. So yeah, I think like all of those things, like first of all, it's a use case that is like very tangible and very easy to understand, I think, to Wall Street folks. Second of all, it's very real PMF. And yeah, like in my opinion, this is only like a trend that's going to continue, especially for companies that rely on kind of offshore payments. They're all going to be on stablecoin rails, in my opinion.
Okay, so continuing with that, Matteo, let's transition to this. How does Ethereum make money from stablecoins? It has something to do with the gas fees, but why do you think these Ethereum treasuries are loading up on Ethereum because of the stablecoin adoption and not like a Solana for the inevitable pursuit of this $2 trillion stablecoin market?
Yeah, totally. So, if you're thinking about this permissionless decentralized network, what you really want is the network to be as secure and as resilient as possible. And Ethereum, has over 10,000 globally distributed nodes. It is by far the most decentralized blockchain in existence. And so, if you're going to have literally multiple global financial systems plug into this one open network, you're really going to need, to ensure that that network is, again, as resilient and as decentralized as possible. And so that's where Ethereum fits right in. In terms of how does Ethereum make money? Ethereum in general, the protocol makes revenue off of people paying gas to transact on the network. I think the simplest analogy for people to understand here is think of the Ethereum network as you going on the highway. You pay a toll when you access the highway. Exact same thing. It's also there as a preventative spam mechanism, so that you don't have kind of infinite loops and people constantly demanding to transact on the network for free. And so that's how Ethereum directly makes money. But that's not to say that I think is necessarily the best way to think about Ethereum's valuation as is on this kind of DCF model based on that. I would really take time to evaluate what it means for a network to sort of be this global settlement layer, and how much people will sort of want to kind of take part in that and securing the network and staking and getting yield off of it. And really the moneyness of Ethereum as opposed to purely kind of a DCF traditional model as you would in equities.
David, same question to you. How does Ethereum, or how do you think Ethereum is going to really benefit from stablecoins in terms of gas fees?
Yeah, I sent you a website, ultrasound.money. I think you're pulling that up. If you scroll down, you can scroll down to a section that is called Burn. And there's a burn leaderboard on the right, and it auto sets to the last 7 days, and it'll show you exactly how much ether has been burnt from people sending stablecoins around. So Tether, the most popular stablecoin on Ethereum, it's burned 138 ether just in the last 7 days, and that's just one application. Vanilla ETH transfers burned 191 ether. Circle, the next most popular stablecoin, burned 92 ether every single week.
Does burn mean that they've gone out of circulation, or what exactly?
Correct. Yes. Okay. And so we're getting into kind of the economics of how a blockchain works, but 50% of every transaction is burnt. 50% of every transaction is paid to the stakers who are actually processing the transactions. And during times of tranquility, the burn isn't really that much. Fees are low. Right now, to send a stablecoin on Ethereum, it's somewhere between, it's just a few cents. It's 3, 4, 5 cents. When the Ethereum blockchain will get very congested, transaction fees will go up and burn will go up. And this is one of these, when I was talking about Ethereum being a very researched protocol, Bitcoin has the 21 million hard cap. And every 4 years, we have the halvening. Maybe you're familiar with the halvening. Is the issuance of on a per block basis of Bitcoin gets cut in half. And so right now, every single 10 minutes, which is a Bitcoin block, 3.125 Bitcoins gets issued. And that's the incentive for the miners to do the thing, to make the blockchain run, to make it secure. Eventually that runs out. That goes to zero. And as a science, as an academic understanding of blockchains, we don't really know what happens then. And this is something that the Ethereum has prioritized, is how do we make sure that, like I said, we can pass this global financial infrastructure down to our kids and our kids' kids and our kids' kids' kids. And so that's a combination of, again, proof of stake and the burn. The burn is what makes Ethereum sustainable. It's what ensures that the usage of Ethereum is connected to Ether, the asset. So the more banks that deploy layer 2s, the more companies that issue assets, the more assets trade. If Ethereum is the settlement layer for the global Forex market, that would be a huge amount of this global utility. And right now, things are kind of peaceful on the layer 1. They've been kind of peaceful. So like I said, gas fees are not too high, but we've seen them get incredibly high. And so this is why, at times, there will be more ether that is burnt than what is issued. And this is just the Ethereum protocol just self-regulating itself, capturing economic excesses when they exist, when things are hot and tokens are flying around and people are paying very high fees. And so it'll capture that excess by doing a stock buyback of ETH is essentially what the burn is. And then when things are calm, it issues more ETH to pay for security, and it just kind of balances like this.
So our countries issuing trillions of dollars every year to fund the ability for the country to even operate. When you say issued,
yes, they are.
ETH is doing that, but then the burn kind of balances that. It's almost like it's balancing the budget to an extent.
That's exactly right. And it's not unlike the IRS charging taxes, but it's through a protocol rather than humans. And then also, Matteo talked about how Bitcoin was born out of the 2008 crisis as a reaction against the banks. Ethereum has a lot of that ethos too. It has a lot of that anti-bank, corruption, culture inside of it. It just does it with a little bit more research and math. And so rather than naively going after just the supply cap saying, hey, we're just going to make 21 million units. Oh, let's hope it works for as long as possible. Ethereum is okay, let's cap the issuance because we know that that's sustainable. And it still does the job of, a good, sustainable, reputable monetary policy that actually is also sustainable.
Right. Matteo, kind of same question to you here. Do you think the economics of balancing itself is also what makes Ethereum very valuable?
Yeah, totally. I mean, I think it's an attractive kind of point of view for the Ethereum asset itself is ever since switching to proof of stake away from proof of work, they've introduced this basically occasionally even deflationary mechanism that burns Ethereum relative to network demand. So yeah, I mean, I definitely think that that's something that Wall Street loves. It's very similar to something that they can also understand pretty simply, which is sort of buybacks in terms of taking issuance out of the market. Slightly different because here it's actually a burn. It's not it's something that can be reissued. It's literally gone forever.
It's programmed to happen.
Yeah, literally there is a zero address, which is an address that nobody can touch and nobody can open and nobody it literally goes sort of stops existing, so to speak. And so I think that that is a mechanic that creates a really sort of beneficial flywheel for ETH the asset, especially as we think about how that scales with more people using Ethereum, the network.
Okay, let's talk about a really big topic in Ethereum that a lot of people are getting excited about as well because Robinhood unveiled that you can now do it on their platform. David, what the hell is staking?
Staking. Well, staking can mean a variety of different things depending on what asset we're talking about. And so Ether staking is a fundamental part of how Ethereum works. Instead of Bitcoin mining, there's Ethereum staking. And this is something that Robinhood, I remember the announcement that you're talking about. Robinhood is just allowing you to do this through the app. And so Ethereum is putting out issuance every single block. It issues about 2% of yield for people who stake their Ether, 2.8, 3.2. As activity goes up, that number goes higher. So when more people are paying more gas fees, half of that is burnt, half of that is paid to the stakers. So as Ethereum just becomes a hotter place when gas fees go up, ETH staking rewards also go up. And Robinhood just allows you to do this through the app. That's what they're known for, just making things super, super simple. Coinbase has done this for a while. And so you can just, if you buy Ether on Robinhood, you can just stake it right through the app and you can just get the rewards in Robinhood. They take a small cut. I don't know how big. Coinbase does the same service, but they just make it convenient for you so you can participate in the network.
Is it almost like if I'm Japan and I'm buying US Treasuries because they're giving me 4.5% for 10 years, if I'm staking and I'm buying Ethereum and I'm getting 2.7%, is it the same thing? I'm getting a reward for buying into the asset?
That's exactly right. And this is why I think Bitcoin's classification as digital gold pairs really well with Ethereum being a non-sovereign store of value that really looks like an economy. And so you have the GDP of Ethereum, and there are tokens that are being traded. There are apps that are being built. There are businesses that are being built. There are people who are using these applications on Ethereum. And all of that is the transaction fees. It looks like an economy. And then Ether is the currency of that economy. And so, blockchains, we've been able to make virtual financial systems that have their own laws that are self-sovereign, that exist on the internet. And these are just internet economies. And it's the whole same sort of relationship as the Federal Reserve issues the currency, the IRS taxes the currency. This is done with a protocol. where, can't be evil. Humans aren't really controlling this thing. It's set and forget. And it just self-perpetuates. But it's ultimately like, that's why I think a lot of people like me and like Matteo get pilled by Ethereum in ways that we don't get pilled by Bitcoin, because Bitcoin's so inert. It's supposed to be inert. It's just 21 million units and then that's it. And some people get really excited about that. Michael Saylor gets really excited about that. I get really excited about the economy that is able to be born on Ethereum. And like, this is where you can start to talk about DeFi and how Ethereum just built its own internally native Wall Street. That's pretty cool.
Matteo, same to you. Staking, how valuable do you think that is to attract capital into Ethereum?
Yeah, I mean, in terms of like, it has kind of two self-fulfilling cycles in the sense that, it gives depositors yield. And so it's obviously attractive because, you can deposit to earn yield. But secondly, it's like, what staking actually means, not to get too technical, but like, as you think about Ethereum, there's all of these kind of validators, which are these kind of, you can think about decentralized nodes, again, all around the world. And when you're staking Ethereum, what you're essentially doing is you're taking your Ethereum stake and giving it to a validator so that they can help secure the network. Validators are, essentially pieces of software that can be run either by entities or sort of by hobbyists or anybody. And yeah, when you're staking, you're essentially enabling the network to be more secure. So I think it's sort of like a really positive flywheel once again, where it's attractive for capital to come in because it obviously offers yield on top of your original Ethereum stake, but it also literally, the money that you put in makes helps improve the network. It helps secure the network. So it's not just like, you're receiving yield, but you're also improving the network that you have a stake in, if that makes sense, by staking.
And that's what proof of stake means, right?
Yeah, essentially. Proof of stake essentially is like a new way to issue the asset. So proof of work, the way to distribute the asset was who solves these equations, who does this work. Under proof of stake, the way that the way that the issuance is distributed is relative to sort of who has stake in the network, secure in the network. So as opposed to doing, so to speak, potentially useless work, you're actually doing something that's net positive to the network and getting yield in return for it.
Right. Okay, David, tokenization. Why is Wall Street getting obsessed with it, and why did Robinhood choose Ethereum as their layer 2 to start tokenizing assets on?
Yeah. Mainly because tokens, it's this funny word, tokens, right? And I think the reason why we use the token word is because it's just this placeholder for what could be. It's like it's an empty shell for anything that can really go in there. So I minted a token once. Again, like I said, I had a podcast called POV Crypto. Just for jokes, I minted 69 tokens, sent them around to people. I was just playing around, having fun. It meant nothing, but that's kind of what you can do. Other people are building an on-chain DeFi app. One of them is Aave. It's like the biggest DeFi app on Ethereum. And there's a token that governs and manages that protocol. Not unlike how Ethereum kind of like, there's the economics of Ethereum network. Well, there's also the economics of Aave. And Aave actually, there's like governance to dictate what those parameters should be. And that starts to look like a pseudo equity, which is kind of cool. And that's a token. And then there are stablecoins. Those are tokens. NFTs are tokens. Tokenized assets, tokenized securities, tokenized stocks. They're all just tokens. And so tokens can really be anything. And we've never really had this like blank slate of possibility for developers or companies, lawyers, anyone really to have this just empty vehicle where it's really your imagination that's the limiting factor here. We just now have these assets. And that's really the profound thing I think about Ethereum, and why I like Bankless. What we like to talk about at Bankless is like, well, previously, if you wanted to make a financial asset before a blockchain, you needed to have that approved by regulators. You needed to have that go through a legal process, has to go and get approved by the SEC, and then you can have this financial asset. With Ethereum, I think that is not a power that ought to be behind closed doors. That should be permissionless. The ability to create a financial asset, more people should have that power.
Why?
Why not? Well, I think the onus should be that people should have to say, why shouldn't an average individual have that power? Why should we have to actually take that power and put it behind a silo? If we are, inside the United States, if we believe in the power of the individual, I think we should. If anyone who thinks that why why do people get that power should actually be flipped on its head. It's like, why shouldn't people get that power? And because then we can open it up to the long tail of human creativity. We can create businesses, we can create applications, we can create GDP. That's kind of my answer. And then so like when TradFi comes in and they see tokens, they see an upgrade path for a lot of their back-end business logic. Coinbase, in addition to all of the things that they do on Base, they actually just manage user accounts on Base as well. And so if you deposit into your Coinbase account, they just use Base as like the back-end logic, accounting logic to manage user accounts. And that's not really something that like is, it's just they're just using the utility of the blockchain. And then same thing with Robinhood. When Robinhood, they were doing their presentation, Robinhood wanted to tokenize stocks and then allow them to trade 24/7, 365 while the stock market is down. Right. And that's because of tokenization on a blockchain. And that's what that can do. And so there's just like, I mean, I could go on with all the different possibilities. You can bake in compliance logic. You can bake, I mean, anything a developer can code, you can bake into the logic of a token, which means if you have an idea for a token, if you want it to just improve in some way using blockchain technology, a piece of paper, which is a representation of a security, an Apple stock, is what they were now. Now they are digital tokens on a blockchain that are programmable. And just the world is your oyster at that point. It's like, really, what can't you do rather than what can you do?
Matteo, you have a startup called Global Token Exchange. So I think your opinion on tokenization would be very valuable. For those that don't know Matteo, again, a good friend of mine, former Palantir, he just raised 15 million Series A from Paradigm, one of the largest crypto funds. So big congratulations to you. What is your vision?
For people who don't know who Paradigm is, it's also a very reputable VC fund in crypto. So without that digital content, Paradigm is a nice name to have. Congrats, Matteo.
Thank you. Appreciate you guys.
What is the vision of Global Token Exchange? And do you think that your startup one day, and a lot of other of the big players, the TradFi players are now going after this, will one day tokenize everything? New York real estate, Kim Kardashian's house, like will we really get to a point where we can trade anything from any place?
Yeah, that's exactly the vision behind GTE, is sort of to build a place where you can trade any asset at any time from anywhere. And back to your tokenization question, like what we said earlier about stablecoins, right? As David said, stablecoins are tokenized dollars, and it's way easier for you to send a stablecoin from New York to Argentina than it would be for you to actually go through fiat, right? Now, let's repeat the same thought experiment, but with one share of Apple. Like, why shouldn't I be able to send one share of Apple to somebody in Argentina, right? Without going through infinite loopholes. If you tokenize that share and put it on a blockchain, then for me to send you a share of Apple, a tokenized share of Apple, it's just as easy as it is for me to send you $1 in stablecoin. And then what about RWAs? What about like real world assets? Like what about real estate? What about credit funds? What about bonds, equities, commodities, like Forex, like literally anything, right? You can literally tokenize everything and put it on this kind of globally distributed financial rail that anybody has access to and anybody can transact on very cheaply relative to traditional rails, and more importantly, like much faster. And so, yeah, like the thesis behind GTE is, tokenize everything, but more importantly, build a place where anybody can trade. Like earlier you said, why? Like where I grew up, like if you walked into a bank and tried to buy the S&P, like it would, you literally couldn't, right? Like unless you're one of the few that has like private brokers with huge minimum deposits, it's very hard to get exposure to American markets, which are quite literally like the best vehicle for wealth building that exists.
And that's a big deal. If you want to get access to this AI revolution, you need the NASDAQ, you need the S&P. And if you are not part of the elite of a country that has access to physical brokers, you're screwed. You have no chance at wealth creation at that point.
Yeah, totally. And even before the NASDAQ, right? Like, why can't we do the same with like all these private companies, like the Circle IPO, right? Like, how much did that cost off of Circle's balance sheet? Because like it was way underpriced at IPO. We would be able to know and close those market inefficiencies if we could just tokenize everything and trade it freely at all times. And so really like the promise here is to bring any asset to anybody around the world. Our bet is that it's just going to improve liquidity around the world. It's going to make everything more capital efficient and generally enable wealth creation really, again, around the world, like no matter who you are. And I really can't stress enough how kind of separated these silos are. And so, yeah.
So that just like philosophically for everyone who has really no idea what Ethereum is or what the concept of tokenizing is, which is myself, that is very attractive to me. Like the idea that if you believe in the sovereignty of the individual, you believe in individual rights, every individual across the world, a lot of the people that are watching today are investors. A lot of people that are watching have made some life-changing money really in the past couple months by buying the dip in April and believing that the tariffs were not going to be as aggressive as Trump said they were going to be. That has changed your life because you had 2 buttons on your phone to press to buy NVIDIA at $90. And that is a privilege that a lot of us take for granted because across the world that doesn't exist. The philosophical idea that crypto would bring that to the world, truly democratize, even though that's the most a cliche word, that is what it's happening right here. It seems like that is why you guys are so attracted to Ethereum.
Exactly.
Yeah. We can talk about finance and money and investing all day long, and I think that's going to be the thing that pulls the majority of people onto Ethereum. But I think if you really like go down the crypto rabbit hole and you really want to take the sci-fi pill, Ethereum starts to look like global human coordination infrastructure. If we're all on the same protocol, if somebody from Nigeria is just one transaction away from somebody from Argentina, and we all have the same financial system. Humanity, the human project is just woven together a little bit tighter. Instead of like, because finance, capital, money, it is what binds us. Money is the global network.
Yeah.
And maybe money gets a bad connotation in the modern days, like money's the root of all evil. But really, I take the opposite view. Like the fact that money works is a coordination tool, and now we have a communication protocol for money. And that's Bitcoin would like to say it's like communication protocol for our money. It's for a communication protocol for transferring Bitcoins around, and Bitcoin is a good standardized asset. And Ethereum is a communications protocol for any asset, the whole asset, any asset that can be. And so that's why some people have always been here in crypto for tokenization, because they want to see every single asset come on chain. We're seeing it with dollars, then treasuries, then equities. But really, why I get shivers down my spine and I get excited about Ethereum is I just imagine when we as a human species are all coordinated better because we are all able to transact with each other across borders, and just have better global GDP because just the commerce rails are just so much more efficient.
Yeah, Amit, one question for you, you love Elon and sort of let's go to Mars and all this. Do you honestly think that as a civilization we could get to the next stage without sort of while having a situation where for me to send money to another country takes me 4 days and costs $50? It's in my opinion very much view it as a step change of sort of how advanced we are as a civilization if we're able to actually coordinate in terms of a financial rail at a global scale.
It's almost like to an extent you guys are saying Ethereum is one of the core elements to world peace. I know I'm being hyperbolic there, but to an extent, right? If we can't agree on tariffs, how the hell are we going to agree on going to Mars? You need some type of financial system that ties us together.
Yeah. So a lot of the ethos of Ethereum's core developers think about Ethereum being World War III resistant. And so, if something goes wrong, if the internet bifurcates, Ethereum will actually keep working. And so There's doomsday scenarios for humanity where Ethereum is actually being built to withstand those things and to be able to support what happens on the other side of that. And that's the level of resilience and long-term thinking that I think has really rewarded Ethereum specifically, because I don't really see any of that kind of ethos existing in any other ecosystem. And that's the thing that kind of pills a lot of people and gets them to work on the Ethereum project.
Okay. We got about 20 minutes left. First of all, Matteo and David, thank you again so much for taking the time out of your day to do this. I know my audience is very appreciative. I'm putting their links in the chat. Some rapid fire, but before we get to rapid fire, this question definitely people are curious about. These treasuries. I mean, A, David, we'll start with you. Is it good for the Ethereum ecosystem? And B, just broadly, would you rather buy the asset or would you rather buy a leveraged treasury on the asset?
I've looked at a few of these deals, and so I'm pretty privy to their construction. It is worth noting that what all of these things are doing is they are pulling forward demand, and so I am cautious about the meta as a whole. The fact that so many are coming online, I think that there's certainly juice left in it. I'm not really worried short term. I think medium term is more there will be a correction. There needs to be consolidation. These treasury companies are a net new thing that we've never seen before. There's never been a gold acquisition company. You would just buy a mining company. And so like everyone, Wall Street included, is all kind of looking at these things, and we're all looking at it with fresh eyes because it's truly a novel thing. And some of them will be here for the long term. Right now, it's a little bit of a mania. Why would you buy a treasury company over the ETH? Well, simply because they should represent levered exposure to that in happy times, and then in unhappy times goes the other way, obviously. It's risk appetite. It's how much volatility do you like? It's how much savings you have in other contexts. Like I have a certain amount of ETH that I feel comfortable with, and so I'm happy to add net new exposure in a more risky play that's ETH denominated because I believe in ETH. And so, these things are here to stay. MicroStrategy is definitely here to stay. Some of these ETH things are going to be here to stay. Some will be bought. Some will, I think some of them are not even like, there are other ones, like there's a Litecoin treasury company. Don't buy that one. Like Litecoin's not.
There's a Dogecoin treasury company that came.
Honestly, I'd prefer Dogecoin over Litecoin. I'm not going to lie, dude. Like Dogecoin at least has like meaningful longevity to it. Like Litecoin is a dead ecosystem. And then you also kind of have to look at the management of these things. I mean, I'm not sure if you were around in 2022 in the crypto world, but we had like these series of gut punches in crypto, starting with Terra Luna, followed by 3 Arrows Capital, followed by FTX. And there was this, it was really, the name of the game was yield. And so there's this one company called Celsius that was truly cheating, and it was truly a Ponzi scheme. And they were playing unfairly versus their competitors by offering 50% higher rates versus their competitors. And so they pulled some of their competitors into the mud with them in order to be competitive. And so Celsius was cheating, causing BlockFi to kind of get into the mud and really push the limits of risk that beyond responsibility. And then there was Gemini Earn, who was doing the same thing, and they were in the same arena offering the same products and services, but they didn't lose a customer dime. And I think that that's going to play out more or less similarly with these ETH treasury companies, or not even ETH treasury companies generally speaking. I think some are going to be very short-termist. Some are going to be here for the long term, for 10 years long plus. It's going to be up to the management teams and how in it to win it that they are and how committed they are, or if they're in it for a quick buck. And so really, I think it's, do you trust the management team? Do you like the asset that they're stocking? And do you like the management team and trust that they will be in it for the long haul? Or have you never heard of them before, and they're in some sort of like long tail asset that like Litecoin, and they're just here to make a quick buck? Like it could be any of those things.
Mateo, same thing to you. Do the Ethereum treasuries have value, and are you a fan of the idea that a company that could be like a dead company 2 days away from bankruptcy, like a MicroStrategy was, says we're going to recapitalize our balance sheet with Ethereum because we see the value of it going higher? Do you think that is a trajectory the asset could take in the future?
Yeah, I mean, I think it's a positive signal in the sense that like it shows that there is like kind of institutional demand for Ethereum. I think the core thing when evaluating like particular treasury companies though, like is like sort of the net asset value, right? The NAV. So whenever these equities trade above NAV, it means that they can essentially issue new shares, raise capital, and acquire the underlying asset, in this case Ethereum, at a premium. But when they're trading below NAV, it works in the opposite. So if you're investing your money in the company, you're actually getting less ETH per dollar than you would just buying Ethereum. And so like back to what David said, like I think the most important thing there is like look at the management and basically, do you think that they're going to be able to make the whole machine work to a point where they can stay above NAV and continue to raise capital and acquire at a premium? Because if you're just with a random manager, like that's a very hard thing to do, right? Like what Michael Saylor did is a very masterful sort of harmony of different like financial primitives. It's not a very easy thing to do. So yeah, management, I think there is the most important thing. I honestly think that like this may be one of the reasons why we get like a new sort of bear market or a big flush eventually, is because like one of these big ones will go bust. And I mean, me personally, like I'm crypto native, right? So I hold Ethereum like on chain, and if I want to get leverage, I go on a decentralized exchange like GTE and long perps, right? I much prefer doing that as opposed to buying like some chair company that now decided they're going to run like a treasury company. There's some good ones, there's some great ones with great management, but yeah, for me, I would rather just hold ETH and go and leverage in other ways.
It's worth saying, Amit, that there's a particular resonance with Ether, the asset, and why it works very well in a treasury company, a good treasury company, in comparison to Bitcoin, simply because Bitcoin is inert. And so, what is Michael Saylor obsessed with? He's obsessed with Bitcoins per share. That's what all of these like treasury companies are trying to do. They're trying to maximize Bitcoins per share. Having Bitcoin on the balance sheet doesn't really net you a lot of yield. I think you can lend out your Bitcoins, but it's for a pretty low rate. Ether is inherently productive. And so the base case, the simplest thing you can do is get 3% stake on your Ether to pay off the debt that you are taking on in order to wind up your treasury company. And that's base case. There are like I'm getting just personally in DeFi with my Ether, I'm getting something like 4.7% on my Ether because it's a highly productive asset. And that's what a privileged position that Ether has as the native currency of its own economy. It is the most, I think, I don't know, I might be bullshitting. I need to check my stats. But like, I think Ether might be the most productive asset of all time because of the utility of tokens on Ethereum. And so these treasury companies that acquire Ether have this extra inherently intrinsic revenue stream coming from the fact that they are stockpiling Ether, that they can just pay off the debt that they are taking on in order to buy more Ether through Ethereum, through the asset they are accruing. So there's a resonance there that is unique to Ether that Bitcoin doesn't have.
I love it. All right, some rapid fire. Again, thank you guys for taking the time. Got some questions from the chat that I want to ask to everyone and see what your takes are. So to both of you, do you think people will pay McDonald's one day with Ethereum? Can they use it in their day-to-day life?
There are companies out there that give you a credit card that allow you to swipe and spend from your on-chain account. EtherFi is one of these things, and so you can have your stable coins inside of an EtherFi. You just deposit it into your EtherFi address on Ethereum. It's the EtherFi account, and then they give you a little credit card, and I think it's a Visa. I think it's a Visa card, and so you can just swipe it anywhere. And so you are on. The cool thing about this is very bankless, by the way. You can, with your stables, you can get the yield on Ethereum 4, 5, 6, 7%, whatever the stable rate is paying that day. And then it will continue to earn that amount until the moment you swipe your credit card. And then the stables will be removed from your account, and then they will go to pay for that transaction. And so, yeah, like that, you can already do that today.
Okay. Yeah, Matteo, go ahead.
No, +1. Yeah, you can already do that today, and definitely.
Okay, Matteo, is there a risk in staking your Ether at all?
Yeah, of course. Like all things, yield is never free. So there are risks relative to holding it spot. But when you have your Ethereum in Coinbase, for example, or Robinhood, there's also like an inherent risk of like the custodian that you're taking on. And this is also why why DeFi exists. DeFi stands for decentralized finance, and really it's a movement to again replace all of the modern financial systems. So not just currencies, right, but banks, money markets, protocols that allow peer-to-peer borrow lending, really everything that you find in traditional finance, but on top of Ethereum. And so like there's inherent risk like when you're using a custodian, and that's why like kind of you see like users going on chain. But it's especially it really depends who you're staking with, right? Because remember, like staking is like giving your stake to a validator. So if you're staking with Coinbase, Robinhood, or very reputable validators, like your risk is fairly limited, but it's never zero, like always when you're getting yield.
And if you're a staking operator, you are 100% in control of the risk. And so like technically there is risk. There's this thing called slashing, and that's how Ethereum keeps itself going in the correct direction. It's a little technical, but really like there's no way to just accidentally do that. Like you need to be either like intentionally malicious or negligent in order for that to happen. So I would say the risks are very low. And when you stake with a staking operator, you're basically taking them to zero because that's their professional job.
Yeah. Right. Like put simply, I would basically just say like the only risk is if you think that the person you're staking with is going to try and corrupt Ethereum. So make up balances for people, things like that.
And destroy their business in the process. Like it's not going to happen.
In 2021, most of the NFTs that were traded were on Ethereum's blockchain. It's kind of making a little bit of a comeback. Do you think NFTs and that whole concept of smart contracts continues to add value to Ethereum outside of just what Wall Street's obsessed with, which is tokenization and stablecoins?
Yeah, there's always these like kind of fads in crypto, and like you said, some of the NFTs are making a comeback. Like my CryptoPunk that actually held its value pretty well over through the bear market. So some of these things actually never really went away. And yeah, so like crypto's inherently social, and when we have these like frothy bull markets, like fads come and go, like what's in versus what's out, that comes and goes, and sometimes they come back. But smart contracts, they're an evolving science. What is frontier? Like novel smart contracts will always kind of adapt and change. Every single like bull market, we like unlock a new primitive. Like in 2017, we unlocked ICOs. We figured out what that was. That's capital allocation. 2021, there was NFTs. I think I don't think we know we got very over our ski tips in 2021 with the whole like metaverse thing because everyone was locked in COVID. But I think all of these things will have a resurgence in due time.
Yeah, like in my opinion, like NFTs, like obviously like their current form factor, which is this PFP, this very cultural thing, I think will always have a place, especially in kind of crypto native circles. But I think the more exciting thing is like NFTs are simply non-fungible tokens, right? So, like one USDC is equal to one USDC. NFTs allow you to tokenize things that are distinct from one another. So for example, like an ID, like your passport, right? You could make it an NFT, and then I wouldn't have to lose I've lost my passport like infinite times and have to go to the consulate and do all this. If it was digital, I would instantly have it with me all around the world. I don't have to worry about where it is while I'm traveling. And the same thing for literally any other non-fungible thing. So I think with NFTs, like the current form factor, which is these profile pictures or other pieces of art, will have its cycles up and down. But I think the core technology is like a core part of blockchains that has like a lot of utility also in DeFi with kind of LP positions, but that's a little bit more technical. I think that's here to stay and going to kind of continue to expand in use cases.
Okay, this is a fun one. You can give me an answer or not. Any is fine. Price targets. You got a lot of people throwing around 15, 20K by the end of this cycle, whatever this cycle means. Let's start off with you, Matteo. You have a price target for Ethereum?
No, honestly, no. I don't really think about it like that. I think about it more as sort of like a directional bet on like where I think the world is going to go and where finance is going to move on to. I mean, I could tell you some number. I could tell you like 10K or whatever, but I honestly don't think that that's like the right way to kind of look at things. Crypto is super volatile. So whatever you think is going to happen, especially if you're reading crypto Twitter, is most likely not going to happen. And so I would highly recommend like sort of buying Ethereum if you understand the vision and really want to kind of be part of this decentralized world computer, as opposed to some price target that somebody is kind of floating around. With that being said, 10,000.
Yeah. When ETH runs, it runs very quickly. When ETH hit $2,400 in 2017, fell down to $100 from 2018 through 2020, and then when it broke $1,000 for the first time again in the January of 2021, it was $4,000 like 5 weeks later.
Yeah,
and so it goes very fast, and so like say me giving a number is also me likely being off by an order of magnitude. I think it being like $7,000 by the end of this year feels safe. I feel secure in that prediction, but that is of course contingent on the TradFi like movement on chain continuing, which I think there will be. There are more ETH treasury companies that will be coming online that are unannounced. Those will happen, and so like 7,000 feels like a safe guesstimate. But really, it's like a function of like, if Ethereum wants to be the best, Ethereum wants to win, and so ultimately, like Ethereum has done this research to be the most sustainable, the most economically sound blockchain with the asset that's the highest utility asset ever. It's shooting to take the number one spot from Bitcoin. It wants that, right. And I think it has some of the technicals to back that up. I think that will take time. But also at the same time, like I just said, sometimes ETH goes really fast. So 7,000 by the end of the year is what I'm thinking. And then, but remembering staying ambitious to ultimately take the number one spot.
David, Bitcoin's market cap is 2.3 trillion. Ethereum's at about 450 billion. Do you think Ethereum will flip Bitcoin's market cap one day?
Like it's ambitious. Like Bitcoin's digital gold, and this whole narrative around digital gold has worked for it very well. It's really a function of like how much of the global commerce can we put on Ethereum, and there's nothing stopping all of it from moving on chain. Like in theory, like it'll take a while. It might take a whole generation. Like it might be like our kids that really see Ethereum as like the number one spot of all commerce ever, and they see this like traditional like localized economy thing is just weird because it's all on the internet. It might be a whole entire generation. Eventually, it flips Bitcoin. Also, because like Bitcoin, like I said, it's on a perfect system. It has security concerns. There's also quantum concerns. So there are Bitcoin addresses that are not secure against quantum attacks, and that can disrupt the Bitcoin blockchain. And so Bitcoin has hurdles ahead that people aren't really thinking about because they just aren't here yet, and no one really knows what to think about them. That's the security budget, and that's quantum. Ethereum's thinking about these things, and so time is on Ethereum's side here. It's just kind of hard to reason about because the timing of these, they're so novel, and the timing of these things are so hard to reason about.
Yeah, I mean, for me, I just don't necessarily think about these things as like one versus the other. I think that's like I don't really think about like things along like this sort of kind of scarcity mindset. I think they're kind of different things. And like David said, there's so many possible outcomes with regards to Bitcoin. Like what happens when all of the supply is gone, what happens when quantum comes alive? Like, there's sort of two different paths, right? Either Bitcoin continues to be the sort of magical store of value that becomes even more rare, and like the fact that it's not being issued makes it even more valuable, or everyone realizes, what am I doing? There's not much I can do with this, and it goes to zero. There's really no way for me to say that, but with Ethereum, I think that there's sort of like Lego blocks that are going to power like significant parts of society moving forward. And so, for me, I'm much more interested in that.
Quick take on these two assets from both of you, because a lot of people are wondering. David, start off with you. XRP and Solana. Are you bullish on both of those?
I mean, the name of my company is called Bankless, so I just can't support XRP. It's literally a bank coin. You can't really, as an individual, run the XRP software. And so I don't want to support that. Like, it doesn't align with my ethos. I don't want to be... Are we okay with bad words on this?
Go ahead. No, good.
I don't want to be cucked by the banks, man. Like, and that's like, I don't want to support that. It's like, it's not by the people. It's not for the people. That being said, like, at the same time, like, it's never been bad advice to buy XRP. And so that buying XRP has always worked out. And so at some point, follow the train. What was the other one?
Solana.
Oh, Solana. Solana's kind of like the meme coin casino. I think the Trump meme coin has heavily branded the Solana ecosystem. My friends are on Solana and they play on the Solana like trenches. That's what we call them. You're in the trenches, like finding meme coins. I don't know what they do on Solana other than that. And so it's, to me, like, Solana is increasingly being branded as the meme coin platform. Before all of this like positive news about crypto, the only time I ever heard about crypto in mainstream society was people's complaining about Trump's grifty meme coin.
Yeah.
And so like that's on Solana. That's starting to become Solana's brand. And the utility of Solana beyond meme coins hasn't really been proven out. I'm not as well on Solana as much as I am on Ethereum, so I'm biased. But Solana has a lot of the same economics as Ethereum. It's a smart contract platform. It burns ETH. This is actually where we excuse me, I'm a little bit sick. This is where we'll actually get into a conversation I'd like us to get into, which is the SVM versus the EVM. And so the Solana runs the Solana virtual machine, and Ethereum runs the Ethereum virtual machine. And this is just like kind of the Excel sheet program. Like, one of them is Microsoft Excel, one of them is Google Docs, or whatever Excel software it is. The Ethereum virtual machine is the most robust piece of developer infrastructure in crypto. Mateo's platform is building on a layer 2 of Ethereum, a blockchain that uses the EVM standard. And the Robinhood chain uses the EVM. The Coinbase layer 2 uses the EVM. Most chains are EVM chains. And so if these are just software ecosystems, it's kind of like saying, you know how Wall Street runs on Microsoft Excel? Well, when they come onto crypto, they're going to run on the EVM because it's a very comprehensible specification. It's easy to reason about. There's a huge amount of developer tooling, and Solana doesn't have a specification. So it's very hard to actually customize the SVM and fit it to people's needs, very much unlike the EVM. So EVM is easy to reason about. It's easy to build on. It's easy to hire a team. There is a ecosystem of EVM builders, and that's why Robinhood chose it. And so when Robinhood chose to use the EVM, to me, I'm seeing Wall Street selecting its preferred software. And I think other people are going to follow suit because there's just so much support for the EVM. And so now Robinhood is going to hire EVM devs out there. And that's going to just kind of become a standard of both talent and coding language that I think is going to permeate into Wall Street. And that is, again, that's one of those things that Ethereum really researched and invested in very, very early. And the Solana SVM, like I said, doesn't have a spec. It's kind of a mess. It's very hard. Like understanding a Solana block explorer is very difficult. And so it's much more like a product. Solana is much closer to a company than it is a decentralized ecosystem. And that's really, to me, the major difference between Solana and Ethereum.
I love it. Mateo, XRP and Solana, are you bulls on those two?
Yeah, I mean, XRP, honestly, like, I don't understand how they do this in the sense that, like, somehow every time I speak to, like, folks who are new to crypto, like, the two that they mention always are XRP and Cardano. To my friends, what I say, that, like, my friends that are new to crypto, I say, whatever you do, like, if you buy XRP and Cardano, like, at least don't tell me. I really don't know how they do this. Like I've never, I've been in crypto pretty obsessively for a few years, and I'm not really sure, like, who's using those products. I mean, I think it's like the tokens themselves are a different story because of narratives and like culty sort of movements and the cycles, right? Like, you get like a bunch of people that think they're early in bear markets, and then it gets run up by sort of whatever is sort of like the flavor narrative of that time. But for me, as like core pieces of technology that I think are going to fundamentally change society, like XRP is definitely not interesting to me. Solana is different. Like Solana is like a very serious engineering culture. Like the team of Solana comes from Qualcomm. Like they not to get too technical with like layer 2s and stuff, but Solana exploded because 4 or 5 years ago, like, it cost a lot to transact on Ethereum. We didn't have like sort of scaled layer 2s that we were able to like enable people to transact for super cheap. And so Solana, came around, made a blockchain that was faster, cheaper, made some trade-offs with regards to decentralization and security, and kind of got a lot of usage there. So Solana is like a very serious, ecosystem with lots of very serious teams. And yeah, you can be bullish on that or not. But in my opinion, it's like, XRP is like in a different galaxy of something that is very culty and I don't quite understand personally.
All right. Last question for both of you. Again, thank you guys for taking the time. We got 1,700 people here that are very grateful to learn more about Ethereum from two people that are really in the industry and working into building on it every day. Here's the question. Does Ethereum need their own Michael Saylor?
Is that not Tom Lee?
Well, that's the question. Is it Tom Lee? Is it Vitalik? Is it you, David? Like, do you need someone? Because I think Michael Saylor has orange pilled so many people, and one could argue he is responsible for that asset rising in value. Does Ethereum need
I think
that?
He totally is.
Does Ethereum need that figure, or is Ethereum so valuable the use case of it naturally will increase the price over time?
Yes, that will happen. Sales and marketing is always good. However, there are like by the end of like in 2 or 3 weeks, there will be a total of like 7 or 8 different ETH treasury companies. And this will kind of be like Ethereum's Avengers of people who are going to be the liaisons between Ethereum and specifically Ether, the asset, to Wall Street. And Ethereum's never really had that before. Ethereum has had terrible representation in Wall Street. If like a CNBC commentator wanted to get somebody to talk about Ethereum, they would bring on like a Bitcoiner. They would bring on Anthony Pompliano, who, respect him, but he's a Bitcoiner. And so like there was just no one representing Ethereum who truly represented Ethereum. That's not true anymore. Now there's Vivek from Etherealize. There's Tom Lee, Joseph Lubin, the most recent one, Andrew Keys. He did great on CNBC. This has never happened before in Ethereum's history. Do we need one Michael Saylor? Like Michael Saylor is like, he's just a god figure at what he does. Like no one truly does it better than him. But we have 7, we have 8, and they're all pretty damn good. And Ethereum's never had that before. And so does it need it? Ether wants to be money for the internet. And that's really something that sets Bitcoin and Ether apart from the rest of the market, is that they want to become store of value monies, kind of like store of value assets. And for that, you kind of need an evangelist to really tell that story. And so, yeah, I will say like Ethereum does actually kind of need that. And it's getting it. And that's kind of like why people are excited about Ether in this present moment in time.
Yeah, Mateo,
yeah, I would echo that. Like, it doesn't need it, but definitely makes it a lot easier if you have somebody giving it the credibility through Ethereum. You know, putting a pudgy penguin as a profile picture. You know, people seeing somebody like Tom Lee at least makes them think like, okay, this is probably interesting, and not like, you know, whatever they may read on the news, like, you know, whatever like sort of bad connotation. So I think it's something that definitely helps. And yeah, the more the merrier. Like, sales and marketing is extremely important. Distribution in today's world is extremely important. So as many of those like great figureheads as it can get, I think is fantastic. Yeah.
Yeah, I would agree. I mean, one of the reasons that my audience and myself got so interested in Ethereum is because of someone like Tom Lee, who said, hey, you know, we're launching this thing. We believe in Ethereum. We're buying $1 billion worth of it. And I think when you have someone who can constantly preach the thesis on podcasts and articles and videos, like, it really does make a difference, because you ultimately need someone to get people to understand why this thing.
I mean, just you and I, right? Like, how long have I been trying to like even just like take a look at crypto, right? Like, you know, it never happened until like Tom Lee. You had a convo with Tom Lee. I think I saw your podcast, and then obviously he's going way in deeper with it. But it really took like somebody like that to give you the credibility to actually be like, okay, this is not just like sort of a bullshitty way to make like fast money or whatever else you see online. So yeah, I think it's very important.
Yeah, and I think for Tom Lee, it took stablecoins for him to even realize there's a meaningful use case that's out there. So I feel like the entire technology infrastructure has evolved, like you guys are talking about with tokenization. And my biggest takeaway from this conversation is, if you believe in true democratization of wealth creation, you have to believe in asset exposure across the world. And in order to do that, there has to be a decentralized way, because if you allow centralized entities to be the gatekeepers of who gets to own or control an asset, you're going to get a lot of people that are disenfranchised from the entire financial system. There you go. David, Mateo, thank you guys so much. Their Twitters are in the description. Really appreciate you guys. Thank you, everybody, for being here. And we'll be back next week for another deep dive.
Thank you, guys. Bye-bye.
Bye, everyone.